It will be a lot of money coming into the coffers of the United States of America.
Donald Trump's decision to slap 10% tariffs on a further $200 billion of the goods imported from China each year is a disappointment for Beijing, but it's certainly not a surprise. China's leaders had already begun to wonder if there was any point trying to negotiate with the US president ahead of the US midterm elections in November. They used to think they could cut a deal with Commerce Secretary Wilbur Ross or Stephen Mnuchin at the Treasury, but they twice found their delicate discussions were undercut by Mr. Trump and his hard-hitting comments on Twitter. So, China's expected to retaliate with another round of its own tariffs on the goods it imports from the US. This is now a real trade war between the world's two biggest economies, of a sort not seen since the 1930s. Within days, more than half of China's exports to the US and 85% of US exports to China will be hit unless one side or the other climbs down. That's not likely, in spite of the potential costs for both countries. In one of the first responses from a Chinese official on Monday to Mr. Trump's latest decision, securities regulator Fang Xinghai said China had ample fiscal and monetary policy tools to cope with the impact, although he also said he hoped the two sides could keep talking.